What if Tesla's Q2 earnings was a miss? What could happen to the stock price? Are we going to see all-time lows going back to 100 or even less, to 24, 44, whatever Gordon Johnson had? Or is it going to be a massive opportunity to buy the dip? I'm predicting that they're going to do 94 cents in earnings per share in Q2, which is a big beat. And I'm not changing that here, but let's look at the stock price. What could happen to it if it misses? So if you guys are ready, smash that like button and subscribe if you haven't already. Let's go. So before we go to the stock price prediction and modify some numbers, I want to do it based on some facts. And Pierre had some bombshell for us in the Tesla community over on Twitter. And by the way, if you guys aren't following me on Twitter, man, then I don't know what you guys are doing, man. And Pierre, shout out to Pierre. You should follow him too. He's a great Tesla bull. But he looks at the facts, and I always like the facts. He's saying here what to expect for Tesla auto gross margin next week. Well, brace for a short-term disappointment. Sheesh. With a further slide of Q2 2023, but also a good recovery beyond. Here's how we looked at it. Tesla lowered prices materially since the end of last summer. A great move, as it kept the company on track to grow deliveries 50%. But there's a big but here. This comes at a cost. Though driving gross margins down from a peak of 30% to 18.3% last quarter, adjusted for credits and leasing. If we take a look at the chart here, it's exactly what it seems like. Look how low the prices have gone. But although this is very helpful when deciding to know what the average selling price could be, this is only for the Model Y and 3. That's it. There's no S and X, which they did a big... The Model S and X sold double than Q1, and they have higher margins, and they've increased their pricing the most out of all of them. And they increased it about almost 4,000 or 4,500 on both models, and it was majority of Q2. So this will have an impact. However, though, Pierre is looking at this as the majority of the deliveries, which was the Model 3 and the Model Y, and we can see from 50,000 all the way down to 43,000 for the Model Y in the US, and for the Model 3, 40,000 to 33,000. And if you include the tax credits, that goes below. That's like that's a $26,000, $27,000 vehicle. That's just insane. Check out China, 38,000. It was at 45,000 at some, 50,000 at some point. And this was last year. Now it's down to 38,000, 12,000 off. That's insane. The Model 3 from 46,000 to 33,000. That's insane. But at the same time though, we have to put in the fact and add the factor that they are benefiting from economy of scale. Not as much as we think they are, because they are ramping Berlin and Texas. And they have ramped quite a bit, but not to the point that we can see a massive margin. Or maybe I may be wrong. We may see it in Q2. Just gotta wait to see what's happening. But this is what the chart is showing for the average selling price. 15 to 25% from the peak. That's just absolutely insane. Moving on to the next thread, he says that it is not the end of it though. Even if price stabilizes during the first quarter, we show that some further margin pressures happened in Q2. As in Q1, still a number of cars were delivered at a better price. This means the average of selling price will drop by a further of $3,000. Q1 was about 44,600 average selling price per each vehicle. Going down 3,000, that's 41,600. That's going to be insane. And here's the chart how he does it. As you guys can see, number of cars, about 120,000 cars ordered at over 50,000 average selling price, boosted in the Q1 deliveries. But if we go to Q2, look at that. That is a big difference. 45,000 to 44,000. That's absolutely insane. But the volume is more. So again, economy of scale can be benefit to Tesla here. It could. We have to wait and see. I'm more interested in the average selling price, and you guys can see here it was 47,000 in Q1 of 2023, which I think this is including credits. Comment down below. Let me know if that's correct or not, because I got 44.6 as the average selling price. But in Q2, they're getting 44,000, which I'm sure if I do my calculations is more close to 41,000, 42,000, which is absolutely insane. Now, obviously, these choices have consequences, because in general, choices have consequences. And Pierre is saying here is, we model gross margin to slide a further of 207 basis points to 15.6%. Oh my God, if that happens, That's gonna be insane. He further goes and says, in reality, things could be a bit better as we may overestimate the number of cars delivered at a high price in Q1 of 2023, but we see a high chance for margins to be down again this quarter. And here we go. I mean, 15.6, 18.3 was the vehicles, just vehicles alone, X credits and all that in Q1 of 2023, Q2 of 2023, 15. Oh my God. If this happens, Tesla's stock is for sure going to drop. But if it's bottoming, it may not drop as much. But again, I'm kind of hoping for a little bit of a, dip to low 200s. I like to buy more, man, because you guys already know I'm all into Tesla stock. But that's crazy. 15.6%, I don't know about that. I mean, sheesh. But he's not done yet, though. He says, on the brighter side, though we expect this to be the trough and gross margins to recover beyond, even if we see some further price cuts, as underlying cuts are improving fast with the ramp of Berlin and Austin. As I mentioned before, this is a fact. I mean, maybe after Q2, we'll hear Austin hitting 6,000 weekly. Or same thing with Berlin. So we'll see. They're rampant, bro. They are rampant. Don't bet against that. And here's a chart of him showing how it is. Q2 of 2023 is 15.6. And then 2 points, 2 points, 3 points. Here's the thing. If we know this is a fact, that this is the bottoming, and next quarter we can see 21% margins, then we won't see that much of a big dip. And if it is a big dip, it's going to be recognized. This is the bottom, and it'll be recovered faster than we think. So if this is the case, cool. But I do not agree with the 15.6. But anyways, we'll put it to the test. Let's see what's up. And he finishes off the thread by saying, bottom line, in the next few years, Tesla will expand gross margins by at least 10 points. So we're looking at, if it's 15.6 he's saying, it should be 25.6. That's what he's saying, while still growing very fast. This makes a nice combination. In other words, he's saying, if there's a dip, buy the dip. That's pretty much what he said. But no, not financial advice, not putting words in his mouth. But if he's saying this is the bounce, then, that's good news. That's very good news. And let's put what he's saying in the stock price prediction chart here. As you guys already know, I have 45,000 vehicles for Q2. He's saying 44,000. In fact, if that's including credits, that's actually even lower. But let's take it step by step. I also put here 18.5% for vehicle gross margin. He's saying 15.6. Sheesh. I come up with an operating margin of 11.9% for the quarter. And EPS, which is the most important thing, is 94 cents. That's my guess, and I'm not changing it. This is my prediction for Q2. I am not changing it. 94 cents. But Pierre is saying 44,000 and 15.6%. That is an operating margin of 9.4%. And if the PE is around 80, that's around $269 per share. But obviously, we're not going to see a PE like this if they have 9.4% operating margin. Maybe for the first couple of weeks or so, it's definitely going to crash. Well, not crash, it's definitely going to be a dip if there's this number showing terrible. 75 EPS, that's not even beating the 81 cents or 85 cents consensus. This is a massive miss. This is not a small miss. This is a massive miss. So we can see probably the PE going down to a 60, maybe even to a 50. $168 per share. Sheesh. With Oracle, we sat down together and we came up with 60 would make sense, which would be 203, which honestly, I'd be buying a lot at this time at these stock prices. 60, 65, around there seems to be around right. But if the stock market gets stupid and Wall Street gets dumb, then we can probably see a PE of 50. I mean, going lower than this, I just don't understand it. I don't think that's the case. Unless, it could go lower if this is not the bottom for operating margin. If that's the case, then no. That is not going to happen. That's probably going to go lower to maybe 40s. But if we know this is the dip and we know this is it, I can probably see a PE of 60 around this time. That makes sense. But this is so conservative. Absolutely ridiculous. 15.6%. That is a sheesh moment. So I'm going to go back to my numbers of 45,000 and 18.5%. The average selling price in Q1 was $44,600. He's saying it was around 47,000. And I think this is including credits. Again, I'm not too sure because when I ran the number, this is the number that I got. So comment down below for clarification. If he says 3,000 less, so that would mean my 45,000 here will go to 42,000. And the operating margin, I'm not going to do 15.6. No. I'm going to do instead, let's keep it a little bit more conservative. I think with earlier today we did 17.5 with Oracle. I mean, that's what he has. So let's put 17.5. 10.7%. And that's an EPS of 81 cents. So that's meeting expectations if 81 cents is consensus, which apparently it is. I think it's between 81 to 85 cents is where it's at. Still, if this happens, we can probably see the stock going down to a 50 PE, which would be around 172 bucks at the worst case scenario, in my opinion. Again, it's all prediction, not facts. Maybe stay between the 60s, like we mentioned earlier with Oracle, 206 bucks per share. But again, I don't think this will be long-lived. This will be short-lived for sure. If they know that this is going to be the bottoming, this quarter being the bottom for operating margin, then next quarter is going to be absolutely monstrous. And it's definitely going to be maybe a 1 month, 1.5 month dip, which I think is going to be a great buying opportunity in my opinion. Which obviously, you already know if this happens, I'm going all in. I mean, I am all in, but just, buying more because I've stopped buying for about a month or two now. So I have cash ready. I'm ready, man. Question is, are you ready? Because if you are, then you guys have to check out this one, Q2 earnings. I know we just went over it, but in this one, we add Q3 and Q4 and the year-end stock price. And the year-end stock price does look promising. So if you guys want to see what that is, check out the video here. Obviously, all prediction. Do your DD, always your due diligence when it comes to these things and your own research, but I don't think you'll be disappointed. Guys, get your I bought the dip merch, shirt. If you guys bought the Tesla dip, which was around 100 bucks per share, then you guys need the shirt, man. Subscribe, and I shall see you guys in the next video. See ya!